Good morning, everyone. Welcome to Nadlan. We are broadcasting to you from the East Coast of New York, giving you daily updates from real estate entrepreneurs so you can become one yourself. And today we have post number 3+4 from Entrepreneur of the Week, Sara Aviv about does easy money with real estate exists and how to do risk management. So who we are, Nadlan is providing real estate courses, mentoring, financing, transfer of money, deal analysis, and great deal offerings. If you like our content, please give us thumbs up and register to our channel. All right, so let's get going. All right, so we have post number 4 from Entrepreneur of the Week, Sara Aviv. I do not believe in the term easy money. I believe that success is the result of determination, perseverance, faith, thoroughness, and more. Some will call it hard work. Being an entrepreneur requires a variety of abilities and mental strengths. There is no room for falls and naps after failure. However, there is plenty of room for learning lessons, improving methods, self-motivation, coping with multiple tasks, and getting back on our feet. When I think about it, a bit like parenting. In a previous post, I showed you a flip that got tangled. And today I want to show you an example of a flip that went easier. The off-market deal I found in my email winked at my very much. I immediately called Holster, who told me that there was an ordinary showing on a certain date. I wish strong gut feeling tried to convince him to show me the property before showing it to other investors. After long minutes of interesting conversation, he let me to see the property in front of everyone. Provided you come tomorrow morning, he said, and of course I could not say no. Let me see it, if I can. After I convinced him to give me priority, so I said yes, without knowing if really any of my staff will be available in the morning to go there. Optimism is the name of the game. I immediately called my partner, the contractor, and said to him, "Isn't it true that you are available tomorrow morning?" As he begins to mumble something about an important meeting he has, he realizes the potential and says, "I will make it happen." If we do not have a first right, once they see the property to dozens of investors, it will reduce our chances of winning the project. Although this is an affordable property price, the challenge was to bring in the money. At the time, I did not have enough capital to buy and renovate enough. When I shared with the contractor that I needed to raise money, he offered to come in as a partner. The property was purchased in the name of my LLC, and we made a joint venture agreement that defined a division between us. It finances the renovation, and I finance the purchase and share in the profits. Eventually, a very interesting partnership was born out of this project, and today we are doing a number of things together, not just flips. Soon, a new construction project on land we purchased in Pittsburgh, Pennsylvania. The property, 3 bedroom, 1 bath, 1,500 square foot, in a suburb west of Pittsburgh, we purchased for $61,000 without inspection. We added another bathroom, replaced an air conditioning system, upgraded the electricity, and did a cosmetic renovation, including renovation of the exterior, cladding, reflooring, kitchen, painting, lighting, and all of the fun. The renovation progressed without unnecessary dramas. No wood fell on the property, no unexpected malfunction fell on us, no professional fell in corona and went into isolation and came to a savior. After 5 months of purchase, the property was sold. Here's what interesting numbers of the deal. Purchase includes closing expenses 61,000, miscellaneous holding and hutch 6,700, renovation cost 61,400, total investment 121,100. The selling price was 185,000. Net sale 169,460. So the profit of the transaction was 40,360,000. and the yield 31%. Okay, so here in the pictures, you can see how the property looked like. There's some more pictures of the property. All right, guys. So before moving into our next post of the day, let's take a short break. All right, guys. So let's go into our next post today, the tangled flip. All right, so this is the post in our website. You can go to it at nadlandforum.com. Okay, so now we're going to talk about risk management. So in every transaction, things can happen that we did not expect in the spreadsheet. And even if we added a cost line to the unexpected, it still sucks terribly. That happens prolongs the duration of the project and equal time for money. Here is an example of the least successful deal and almost as long as this post. In August 2020, I had two other investors and I purchased a charming country property that needed renovation in a town near Pittsburgh, Pennsylvania. A foreclosure transaction purchased from the bank in one of the 5 most sought-after school districts. Risk number 1. We had a few comps, something like 3 or 4, and not all of them were a perfect match for the parameters. Property size, number of rooms, year of construction, garage, and number of parking in it, basement and land area. Everything else required an upgrade: electricity, plumbing, air conditioning, systems, flooring, kitchen, and bathrooms. From the moment the offer was received, the clock started ticking, and we must act quickly. Do an inspection, prepare a scope of work for a renovation plan, send contractors to give quotes, ask other agents who have sold properties in the area, and make a decision: go or no go. Renovation quotes were very close to what we estimated, but other question marks across from other real estate agents we sent to inspect the property. Out of 6 agents who sold similar properties in the area, only one agent was an optimistic as our agent and thought the property could be sold at the price we expected, $230,000. And there was an agent who even thought $180,000 was the highest price we could get. How is it possible? Mainly because of the condition of the neighboring properties on the street. Risk number 2. While the area was in demand and similar properties we found were sold in the $230,000 range, on this particular street, the properties were outdated and the street itself was a bit neglected, and the pessimistic agent gave it heavy weight, and rightly so. We knew that the demand in the area was high and there was a shortage of 4-bedroom properties that were sold for less than $300,000. But could this property really be sold at a price that similar properties were sold? As you can see, the decision was a go. We decided to take the risk. We chose a contractor I worked with and started building a budget with him and exploring options for renovation. After quite a few meetings with him for hours, in the final stage of agreeing on payment terms, the negotiations exploded because he asked for too large of an advance and control of the budget. Of course, we did not agree. Another I worked with and already gave another contractor I worked with and already gave an appreciation for the renovation. We have built a renovation plan according to a budget that will allow us to improve the property. Add another bedroom and bathroom, not exclusive and too expensive, but still impressive and meets the standards. And we will have a margin of safety in case it is really difficult to sell at the target price. Full of hope, we set off. Given the rising demand that caused prices to rise, we had thought of minimizing risk and selling the property after several repairs to another investor who would continue the renovation. We set a 2-week time where If we did not get an offer, we would go back to the original plan. In March 2021, we finished the renovation, did the staging, and the property went up for sale for $230,000. Within 5 days, we closed on an offer and waited with fingers crossed slightly that everything would go smoothly. So what did not happen? What did happen? We got an inspection report from hell, from the inspectors of the buyers. For most of his comments, we were aware that we had done additional inspection before posting for sale, but there was one comment we were not aware of at all, and that is a comment on a problem with the basis. How do you miss such a thing? Under the addition of construction made to the property, a crawl space was created without access through the basement of the property, a space that no one crawled down to. Not our inspector or visited the property 3 times, neither the contractor nor the agent, but the diligent and professional inspector of the buyers made a pass. Crawled under the extension, this one, and discovered a wall there that began to crumble, and with it, our hopes also crumbled. Just plain not really. I was shocked, worried, hesitant, did not sleep well for some 2 nights, but got up on the third morning, reset, and focused with the understanding that this is the situation and now it needs to be resolved for the best. I started a troubleshooting operation. I got the most artillery agent in the area. In fact, she is the agent who introduced the bank that sold us the property and sat her for a face-to-face conversation with women and took out all her sub about the property area and our potential to sell at a profitable price for us. In addition, I brought 3 engineers who visited the property and gave a proposal to repair the wall. But what did not end the story, each engineer who came to check the wall recommended that in addition it is worth solving the moisture problem in the basement by building a French ring instead of the pump that was installed. What is the cost, you ask? $12,500 including wall repair. Here you have unexpected expenses and a 3-month delay in completing the project. I went to Facebook and met with the company that specializes in foundation repairs. We sat down on the plan to build a new drainage system and basement waterproofing and decided to move on. Until they were free to do the work, it took another 3 weeks of hair plucking and nail biting. Risk number 3. True, we did not have to install a new drainage system in the basement, but we wanted assurance that the property would be sold quickly and not lie long in the market and at a price that would leave us a profit. I realized that this repair will add value to the buyers, dry basement with warranty, and help us sell quickly without additional delays. In July 2021, a year after the purchase, the property went up for sale again, this time for $245,000, and after 3 days we closed on a bid $10,000 higher than the asking price. I forgot to mention that along the way there were more surprises which will not be boring. The staging company damaged the wall while leading the furniture. The newly installed refrigerator started to leak while the property is famous and customers come to showing. The company that repaired the foundation shook the room above the wall a bit and caused minor damages. Panels fell, linted warped. Of course, the lender of the buyer demanded further repairs after its inspection. In one of them, we had to replace a lock for a 40-year-old rear exit door, and after 3 days of searching, our Canon agent found the right lock. In short, fun life. Transaction numbers. Purchase includes closing and expenses, $105,237. Renovation, $72,598,000. Maintenance and additional cost, $7,019. Total expenses, $184,855,000. Net sale, $222,300. Profit on the transaction, $37,445. Yield, 20%. The project took a year instead of 5 months, and we expected a higher profit. As this project got more complicated, they completed 3 other projects that were purchased after this property and sold before it. In the next post, an easier deal. So you can see here how the property looked like after renovation. You can see how beautiful it is. All right, guys, so that's it for today. And we will be with you tomorrow on another post from Sara. So thank you very much for joining us, and we see you tomorrow.